Alright, hello everyone, and welcome back to Daily Update, my 1000 days challenge. This is day 990, so it's almost close to 1000 days. So without a doubt, I'm definitely falling behind my target. So nonetheless, like I say, it's still a very interesting journey for the past 3 years, closing to the end of it. And I definitely did make some improvement, and I'll be making some changes along the way. So on the bright side, I did manage to lock in certain profit, and I haven't been making much trade for the past, I think, since FTX closure and since the bear market has come. And I would say it's a mixture of both in terms of the situation why it does gives me a lot of entry position wise, simply because my trade entry setup, like what I mentioned, mainly involves around a more of a very clear bullish market trend, or even I would say a very clear bearish market trend. So right now, for the past 6 months or more, we have actually been flatlining or crisscrossing. So especially if you look in terms of say of the 4 hours, and on a daily chart wise, we haven't have a very strong, clear momentum trend itself. And that gives me a very hard risk to real setup because I do a lot of trading stop loss. So moving forward from these experiences, I also will be tweaking in terms of strategy wise, that in terms of trading stop loss, it may not be that necessary ideal when it comes to this kind of crisscrossing market whereby fixed target of a risk to real setup may be a much better kind of way approach, simply because many times we don't actually get to hit very specific far target before we get a very strong retracement or unexpected pullback in that sense. All right, anyway, today is a Monday, so looking just on the Monday perspective, I did look back at this extra horizontal weekly resistance. Because moving on the weekly chart, you can see the over peak we hit over here, peak we hit over here, and then also the start of the candle over here itself. So very clearly on the weekly chart itself, these two particular tips align with this particular tip. But more importantly, like I say, it's not so much as to here. Even if you were to look on the daily chart itself over here itself, I would consider expand this upward and downward, consider it as a zone rather than say a particular line in place. So in terms of short-term resistances, what I do think that we hit, when you look in terms of this, then perhaps this could be a first wave, this could be a third wave, and this could be an extended kind of fifth wave kind of pattern itself. So in this kind of particular scenario, what I do potentially look for a long setup would be, let me see, yeah, so if you're looking from all the way to the bottom, all the way to the upside, if you have a very strong retracement or decent retracement, I would say a very strong region of support would be somewhere along here, which both coincide with the 200 exponential and simple moving average, the zone over here, and also in terms of horizontal support or resistance support, you can see resistance over here, resistance over here. So we do come over here towards the lower end of it. I'll be very keen to add between this 24.5K to 26K region itself. And even if we do barely touch this 200 simple moving average, that will be where I'll be looking to even enter for long setup. And that is in terms of a long-term hold perspective. But if it does come into here, see a very nice strong support, I'll be very keen to enter a long setup. And as for trading perspective itself. So short-term wise, I do intend some sort of volatility. On the other hand, if you don't see a typical kind of ABC wave kind of retracement pattern or pullback pattern, then I do think that we are likely to consolidate relatively flat, and that will be a relatively bullish sign as well. So ideally, of course, I do want it to pull back further, just as a lot of people does, simply because it does give a much better entry point in terms of long-term opportunity. But basically, in terms of trading, why it doesn't matter whether we have a strong pullback or we have a consolidation, simply because it's more of a risk to reward setup perspective. The tighter the bound itself, the better it is for in terms of a long setup. If we do in terms of a retracement or pullback wise, what I do want to do is perhaps zoom in on the shorter time frame on the daily or on forward chart, whereby we see a potential change from a bearish market structure to a bullish market structure on as short as the 4-hour time frame, then I could perhaps enter a long setup, especially with a very clear bullish divergence as well. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop by your comments below. And just before I do, so yeah, so over here perspective. But anyway, yeah. But anyway, let's just look this. I don't think it is relevant for now, but if you look in terms of weekly chart, that's where I'm still looking at in terms of this particular Fibonacci retracement. Simply because I do think that it is very much so, simply because we do have a higher high, a very clear MACD bearish divergence signs, but that not to say that we have and clearly will break below it. It would definitely depends on the reaction between this price action itself and the 20 exponential moving average. First line of support will likely lead to some of a bounce, but the question is a big bounce and we could retest a little bit. and then very clear decisive drop. Then we have a very clear break in terms of a market structure from high and a lower high to a low and a high lower low. And then we'll quickly very much dive into this potential zone itself, which I'm very keen to buy in. All right, with that said, I've come to the end of today. If you guys have any questions, feel free to drop out comments below, and I'll see you guys tomorrow. Take care. Bye-bye.